Hey, it's Mark from Caliber Home Loans. It is Friday. It is the end of the month, May 31st. It has been a crazy month here. We have really upped the production. It's gotten really busy, as I'm sure you all know. There's a lot going on in the marketplace, lots of buying and selling going on, a lot of houses coming on the market, and even more buyers coming into the market. So again, the prices are starting to edge up a little bit, and negotiations are heating up. So let's take a quick look at the markets. So what we're looking at right now is the chart for today. So we started at 2.98, and we're going to end up somewhere about 8.18, 8.19. So it's certainly got a little bit better today. There's been some downward pressure on rates this week, so that's a good thing. So let's take a look at the week. So we started here at 2.85, and we're going to end up right around again 8.18, probably somewhere in there. So it's been a good week. You can see this acceleration of the price going up towards the end of the week, late yesterday and then through today. So remember, this is a chart of the bond prices. Prices go up, rates go down. Prices go down, rates go up. Let's take a look at the month. The month, as you can see, we're still on a trajectory. Pricing is still on an upward trajectory, which is pushing rates down. And then since the beginning of the year, we're still way above where we started in the year. So rates are still low. They're edging down a little bit. There's actually been more refis come into the market. People are looking at their options. A lot of people who have bought maybe 2 years ago with mortgage insurance didn't put 20% down, are in a great position now to take a better look at that and possibly refinance and not only get either the same rate or a better rate, but get rid of the mortgage insurance. So if you've got clients or you have you've done a purchase in the last couple of years and you're paying mortgage insurance, we need to take a look at what we think the value is today based on your current balance and see if there's an opportunity to get out of the mortgage insurance. Also, the VA renovation loan is up and running, so that's been a mild success so far. We're pushing out the information. So again, anybody who qualifies for a VA loan who needs work done to the house after they close, we now offer a VA renovation loan. Still zero down, no mortgage insurance. Probably the best. It's certainly the best renovation program out there. Other than that, we've got our portfolio programs, 1 day out of bankruptcy, our jumbo products that don't quite fit into the regular box, goes up to $2.5 million. So we're really trying to expand our products to get as many people into homes as possible. We really want to help as many families this year as possible find a house, get into the house, into their dream house. So if there's anything I can do for you, I will be around this weekend. 248-705-8431. I do want to touch real briefly, there's a chart that I added onto the email. It's a bond chart, and it shows the 3-month, the 2-year, the 5-year, the 10-year, and the 30-year. And what I'm showing on this is the items that are highlighted in yellow. So the 3-month yield is actually higher than the 10-year. That's not supposed to happen. That's called an inverted yield curve. And then the U.S. the 2-year is at a little bit higher than the 5-year. Again, not supposed to happen. So we've got an inverted yield curve. We talked about this before. Typically, this is the preliminary signs of a possible recession. I'm not sure that that's actually going to happen. The economy's pretty strong, but we need 2 down quarters in a row to be actually in a recession. So we'll just keep an eye on the yield curves and see what's going on and see if it remains inverted or how bad it's going to become inverted. Part of this is being driven by the tariff talks in China and now the tariff talks in Mexico. So if you're not up on those, you need to take a look at what's going on the last couple of days with Mexico. This is affecting the market. The Dow is down 300 points. But when the stock markets go down, typically rates go down because it pushes bond prices up. Money flows out of the stock market and into the bond market as a safe haven. So again, I don't think this is going to change anytime soon. So it should remain a very strong mortgage market. for our buyers. So if anybody out there looking and isn't sure, it hasn't been pre-approved yet, you got to get pre-approved before you go look at houses. You got to know what you qualify for, what you can live with before you start looking at houses. So give me a call, 248-705-8431. Have a great weekend.